I'm Caroline Hyde. This is Bloomberg Technology. Coming up, Apple announces 3 of its suppliers have pledged to use only renewable energy. We'll have an exclusive interview with an Apple executive, plus discuss the larger economy of the tech giant supply chain. The battle lines are drawn as the world's biggest internet giants gear up for a fight with US regulators over net neutrality. And another tech company dives into the public market. We'll give you the latest outlook for the IPO landscape. First to our lead, our exclusive interview with Apple's VP of Environment Policy and Social Initiatives as the company pushes toward its goal of all facilities to be 100% renewable. Now, Lisa Jackson told Bloomberg's David Gura how the company persuaded 3 additional Chinese suppliers to rely solely on green power.
You should also expect to see more and more suppliers. You know, we have Compal, we have Beal, we have Sunwoda, 3 new suppliers who've said, in China, we're going 100% for Apple's operations. And it wasn't hard to do. It was a matter of making them, helping them understand how we invest in clean energy so they could take advantage of the same marketplace and the same returns.
Now, this comes as some Apple suppliers have been feeling the pressure. Shares of European chipmaker Dialog Semiconductor plunged after an analyst warned that Apple will probably cut back on use of the company's chips. Now, joining us to take a look at the supplier ecosystem, David Kirkpatrick, CEO of Techonomy, our guest host for the hour, friend of the show, live from New York. And here in San Francisco, Alex Webb, Bloomberg technology reporter who knows all things Apple. Alex, talk to us about this particular story, the new news coming out. Interesting that they're Chinese suppliers going for renewable energy.
Yeah, Apple's actually been buying Chinese energy sources itself in order to facilitate these kind of contracts with its suppliers. The effort clearly on the supplier part is, you try to cozy up to Apple. As we've seen from the Dialog example, and particularly from Imagination Technologies, these guys can be a little bit vulnerable, so doing as much as they can to get in Apple's good books, but there are, of course, economic advantages as well.
And talk to us about them, because it actually is a bonus for Apple longer term if they have a clearer picture of their energy sources.
Yeah, so, I mean, absolutely full credit to Apple for trying to get renewable energy sources. It has huge advantages for the environment, but there is also a business incentive as well. Namely, the way these things often tend to work is you sign a 20 to 30-year purchase agreement with an energy supplier. That, of course, locks in a particular price that you're going to pay for your energy over that period. Now, if it becomes cheaper on the open market, you can still go for that cheaper option, but it gives you the ability to predict how much you're going to be spending on energy for the years to come.
Money talks, David, and it's interesting timing. Therefore, of course, perhaps unsurprising, there's a business case to this, not just an environmental case, particularly at the time when the administration perhaps doesn't care so much about the environmental credence of a business.
Well, it's also not surprising that the suppliers with whom they're making these deals are in China, because really this issue of renewable and sustainability, renewable energy is much bigger there than it is here, increasingly, and the resources do exist there, and even if they don't today, they're likely to tomorrow, at exactly the point when there's a lot of question in our own country about whether we're going to keep moving in that direction. It actually could be, if a company like Apple is putting an emphasis on renewable energy for its suppliers, it might force them to take more moves outside the United States.
Fascinating. I mean, something that the administration definitely doesn't want. And Alex,
or understand.
Our favorite. Or understand. Interesting. David, Alex, I'm going to bring it back to you, because favorite function, SPLC, supply chain analysis. It really digs into who the suppliers are of Apple and indeed who they supply to. It's a bit of a murky picture, but if you dive into my Bloomberg, you can see just how dependent certain suppliers are on Apple. I'm looking at Hon Hai Precision. 54% of its revenue is got from Apple. Pegatron,
that's the Foxconn parent, of course, Hon Hai, yeah.
Exactly. So big players here. Foxconn being insignificant, but they have started to perhaps drop a few of the suppliers. We saw Dialog Semiconductor, Imagination over in the UK as well. Is this a worrying time to be an Apple supplier? I
mean, it's always worrying if you're an Apple supplier. Apple holds all the keys. They can drop or take anyone on at any given moment. Now, that's why, of course, you do as much as possible to keep Apple, on your side. the thing is that because of some of the pressure we're seeing in the mobile phone industry, the smartphone industry, there is perhaps a greater impetus now for Apple to try to do more going back into the supply chain, to try to own more of that technology in order to wring every last dollar that it possibly can out of the iPhone. We've seen the way that Apple's gone forward in terms of integration, in the sense they own all the shops through which they distribute and sell their phones. That's the kind of forward-looking integration they've done. Now, in the opposite direction, they are doing more and more in the technological front to own the fundamental technologies which underpin the iPhone.
And indeed support their margins, perhaps why they're going after Qualcomm, one of their providers, so much at the moment in terms of royalties. David, are you overall an Apple optimist or a pessimist when it comes to how much they can rejuvenate themselves, still be the innovator that we all remember over the past decade? We've got the iPhone 8 coming up.
Well, that's an interesting question, not the one I would have expected you to ask. But I would say I'm neutral on that. I think it depends a lot on this new phone that's coming out this fall, about which there are still a lot of questions. I frankly am a little skeptical they can make it fundamentally different enough to like really move the needle, but maybe they can. They've done miracles before. Certainly their ability to execute logistically is unparalleled. But I wanted to just briefly comment on this reliance issue for the suppliers, which is connected to their logistics superiority. You know, this really ties into this whole issue of the responsibility that some of these companies have in the tech sector now that they are so gigantic. You know, Apple is the most valuable company in the world. One might ask if they have this fleet of suppliers all over the world who live by the sword and die by the sword, and if Apple, you know, lifts its lower pinky, it might hurt them seriously and cause their stock to plummet. Does Apple have some kind of special responsibility to let their shareholders know what might be coming, or to even take them somehow under its wing more than it has? I mean, that's not the way they would think they ought to behave, but when a company is that big, it really makes me wonder.
Makes you wonder when, of course, Apple is one of the biggest shareholders of Imagination Technology in the UK that has just plummeted on the back of potentially not being quite such a big supplier as it had previously been. Bloomberg Technology reporter Alex Webb with us. David Kirkpatrick, very pleased to say you're going to be sticking with us as guest host for the hour. Now, another stock we're watching. Tesla shares jumped after CEO Elon Musk announced plans to pad the company's lineup of electric vehicles. Musk said that after the final unveiling of the mass-market Model 3 sedan in July, Tesla will unveil a semi-truck, also known as an articulated lorry if you're a Brit like me, and in September they will also then be having a pickup truck 18 to 24 months afterwards. Tesla will also bring back its very first model, the Roadster, but this time it's a convertible. Coming up, the biggest internet companies in the world have a message for Washington. Leave net neutrality rules alone. We'll dig into the battle over the internet oversight. That's next. And a reminder that all episodes of Bloomberg Technology are now live streaming on Twitter. Check us out. It's at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Now, the Federal Communications Commission says T-Mobile, Comcast and Dish Network are among the top winners in the latest U.S. airwave auction. This is the bidding process for TV station airwaves that are now being repurposed for wireless data traffic. T-Mobile was the largest bidder at nearly $8 billion. Dish Network bid the second most at more than $6 billion and is already sitting on a vast trove of airwaves it has yet to use. Those shares sunk after we saw that announcement. But sticking with the FCC now, and the largest internet companies in the world are making their case to the regulator not to gut existing net neutrality rules. Now, the principle, of course, that internet service providers should enable equal access to all content and applications. This week, the leader of the trade group that represents the likes of Amazon and Facebook met FCC Chairman Ajit Pai in Washington. Pai has a steady track record of opposing the existing rules, particularly the so-called Title II classification, which gives his agency authority over the internet. Now, the Internet Association CEO Michael Beckerman joins us from Washington. Also still with us, guest host for the hour in New York, David Kirkpatrick. Michael, thank you for joining us after you indeed have met with Ajit Pai, and interesting moves being sounded. Perhaps he wants to get rid of oversight of the ISPs by the FCC, he wants to move it to the FTC instead. And your view is that net neutrality shouldn't be changed with. Was he open ears or not?
Well, it was a very cordial meeting. I have a lot of respect for Chairman Pai, but we do strongly disagree on this issue. One, we think the FCC got the rules right in 2015, and we're advocating that they keep it the same. If it's not broke, don't fix it. But as it relates to moving the rules from the FCC to the Federal Trade Commission, I would point to the comments from FTC Commissioner McSweeney just this week that they're not the expert agency. We have agencies in our government, and all the engineers are at the FCC. That's the expert agency. We keep it there.
We are actually looking at the statement made by Terrell McSweeney, as you mentioned, talking about its importance to perhaps keep it with the FCC. It's worth mentioning she herself is a Democrat, so perhaps opposed to some of the views of Ajit Pai. But Pai does make out that clearly he's always tried to say that he wants net neutrality principles to remain, but a voluntary pledge instead. Do you think if it wasn't supported by the law, we would ever see net neutrality remain a reality?
Yeah, I think there's way too much at stake here. The competition of sites online, the ability to innovate, the low barrier to entry for startups, and the consumer experience that we know and love, both on mobile and your fixed broadband connection, rely on these rules. And if you're willing to agree to them in a voluntary sense, you might as well just keep the existing rules that are on the books now to protect consumers.
David, do you agree with Michael that if it ain't broke, don't fix it? Is it not broken as far as you see? And do some of the startups voice their concerns or not to you?
Well, ironically, I do agree with him that if it's not broke, don't fix it. But to me, I come to a slightly different conclusion, or at least I worry less than he does, shall I say. The thing that I feel and have noticed is that there have almost never really been patent obvious violations of what people consider to be net neutrality, and yet there has been a huge hullabaloo over a long period among internet activists about coming up with new rules that the government should get more involved. I believe capitalism generally works, and I honestly don't think that it's that big of a deal whether we have a voluntary agreement or a law, given that there is, in my experience, hardly any evidence of there really being a problem. And I think also that the idea that the internet companies like Facebook and Google are sort of somehow weakened, being bullied around by companies like Verizon and AT&T is just fundamentally illogical if you look at the market caps, you look at the market power, you look at the consumer relationships, and you look at the way they're perceived in the marketplace.
Michael, respond to that. Is there evidence, do you believe, that prior to net neutrality, that smaller startups and that certain internet content makers were unable to get equal access to the internet? Well,
yeah, a few things to respond to that. One, we have had rules, or at least the overhang of rules, for quite some time, from the 2010 rules that got struck down and then back and forth. And so we have been under a period of uncertainty in this area where I think it has kept everybody honest. But in terms of the protections that are needed, 70% of Americans have 0 or 1 choice for your broadband, a high-speed broadband connection, which means there's not a lot of competition when you compare that to the internet, where everything is a click away. If you don't like one streaming service, you can use another. And there's lots of competition. And this is not just about the large companies. Certainly, maybe you could say they can fight for themselves against ISPs, even though I do think it's a different landscape. What about the next generation of companies? I mean, that's what this is really also about. It's about consumers, and it's about maintaining the innovation and the low barrier to entry for the next generation of internet companies to have the same chance that the first generation did.
If we see Ajit Pai, Michael, stand by his word and indeed move net neutrality or make it a voluntary process, move it to the FTC, will the internet provider, internet companies that you represent fight back legally?
Listen, we're going to make sure our voice is heard in Congress, in the FCC, through every means possible, because we're outcome-oriented. The rules that they have in place right now are working for consumers. We want to make sure they stay. We don't think it makes sense moving this to an agency that's not the expert agency. You wouldn't move approval of drug prices from the FDA to the FTC. Why? Because all the scientists are at the FDA. That's where the experts are. The same thing here. The engineers and the experts are at the FCC. It should stay there.
Shouldn't the internet companies that you represent therefore be overseen by the FCC to a certain extent too, then, if that's where all the engineers and experts are?
For what? I mean, right now they're covered by the FTC as it relates to privacy. It's a little bit different. We're talking about network management, and those are the engineers that have the expertise in making sure that the internet stays open and free and you don't have the ISP gatekeepers. Again, it's different when you're looking at edge providers versus ISPs.
Michael Beckerman, great to have your opinion on the show. Thank you very much. CEO of the Internet Association, live from Washington for us after he met with Ajit Pai of the FCC. And our guest host, Techonomy CEO David Kirkpatrick. Wonderful to have you on, staying with us as well. Now, another tech company has taken the IPO plunge. We'll hear from the CEO of the cloud-based search technology company, Yext, on their first day of trading. That's next. This is Bloomberg. Instagram is seeing continued growth of its Snapchat Stories like feature. The Facebook-owned app announced that over 200 million people are using Instagram Stories every single day, up from 150 million in January. Now that means Instagram Stories now boasts more daily users than Snapchat, which last reported 158 million daily users in February. Snap shares slid around 2% on the news of regain, but regained to close flat. Now, tech companies seem to be lining up to enter the public market. Yext is the latest to take the IPO plunge. Based in New York, the startup helps large chains like T-Mobile, Denny's and Ben & Jerry's manage their individual listings across search engines, directories, social networks and apps. Bloomberg's Alex Barinka spoke with Yext CEO Howard Lerman at the New York Stock Exchange to find out, well, why now was the time to list?
Being public presents us with incredible credibility. Many of our customers are the world's biggest financial institutions. They want to see a company that has transparent financials. They want to see our audited financials. They want to know that a company is going to be SOC 2 compliant. And so being public helps us with our credibility. It also is a huge marker of our awareness. As a pioneer in a new category, the most important thing is creating the awareness of how we can solve this huge problem. You know, for a company, their website used to be the centerpiece of their digital experience. But now at the exact moment of intent, it's maps, it's voice search, and it's knowledge card answers. And Yext helps our customers with this. We're new in this category, and we need to make sure that we have the awareness, and IPO helps us do just that.
That was Yext CEO Howard Lerman. Joining us now is the interviewer herself, New York Bloomberg IPO reporter Alex Barinka. Still with us is my guest co-host for the hour, Techonomy CEO David Kirkpatrick. Alex, to you first of all, we seem to see that enterprise software is where it's at when it comes to IPOs. Any more that we should keep our eye out on?
That is where it's at, and that is actually kind of typical for a healthy tech IPO market. That's where the majority of the listings are going to come from. The ones I'm watching is Cloudera. We broke news they were prepping their listing. They're looking to go public at a valuation of about $4 billion. They actually filed publicly last week. MapR is another one who's considering Ancestry.com. So you can see there's a number of names out there, whereas at this time last year, I didn't really have much for you. There weren't a lot of people going. So it does seem like there is investor interest for these listings, which is an important ingredient. And now we have the supply. We have the companies actually getting ready. So it seems like we will see more in this enterprise tech class in terms of U.S. listed tech companies.
Alex, it's David here. I can see why Yext CEO would want to go public for the marketing reasons. But I'm not sure I see why investors should be interested in a company that had 120-some million in revenues and lost 40 million. To me, that feels very bubblish. So what do you think about that?
It seems like we've seen kind of a shift back to putting more onus on revenue. When you look at late last year, before we saw this rush after Labor Day in 2016, investors in public equity markets really wanted both top-line growth and they really cared about profitability or path to profitability. We've seen more of an appetite, whether it's a company like Yext or even Snapchat, which did go public earlier. We've seen more appetite for these younger companies where the investors are saying, look, I'm really willing to come in and take a more risky bet, award you on valuation because I think that you have potential in the future. Now, talking to people on the street, there are kind of two classes of investors that are looking at this. We have the ones who really want to get in and believe in these companies, but the fact of the matter is there still are not a ton of tech listings, and you have some people chasing these kind of near-term returns. Yext itself was up upwards of 20% today on listing day, so you think about kind of the fast money moving in and out, chasing those short-term returns. That is definitely a reality right now in the IPO market.
It's a reality. I'm also interested as to whether they think that IPO is always going to be the best exit strategy, because what we still is burned into our memory is the start of the IPO doorway, which was slightly slammed shut by App Dynamics suddenly getting bought up by Cisco at the last minute. Is it M&A or is it still IPOs that everyone's really focusing on?
Right now, it seems like the pendulum has swung back to IPOs. And that is mostly because the public market valuations that you're getting is actually better than what strategics are willing to give right now. My colleagues and I sourced up a bunch of different situations, whether it be Okta, which listed Plex Systems, which is considering both options, AppNexus, which considered a dual track. All of these companies are looking now to the public markets. Now, could that change at the drop of a hat? Potentially, yes. And everyone's very concerned about where equities will be over the next 18 months to a year. But right now, it does seem like IPO is the course of action for the exit-ready companies who could potentially be standalone and you know, have some interest from public market investors.
And all eyes in Europe on Spotify as well. Bloomberg's Alex Barinka, thank you. And Techonomy CEO David Kirkpatrick, he'll be sticking with me, I'm pleased to say. Now, coming up, it was another crazy week for chip makers. We'll dig into the drama at Qualcomm, along with other headlines grabbing our attention this week. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde. And just before he took office, President Trump met with all the major tech CEOs in a highly publicized gathering. All the while, Oracle CEO Safra Catz was being considered for a post in his administration. While she didn't take a formal job, she did assist in the run-up to the inauguration. Earlier, we spoke to Bloomberg's Corey Johnson and Ian King about that and other tech stories grabbing our attention this week.
She's an extraordinarily effective leader in Silicon Valley. Oracle's done very well when so many of its competitors have not. Some have completely gone away while she's been at this company for, you know, and in many different roles. Now as one of the two CEOs there, she's done very well. The administration would be lucky to get someone like her, but I find it hard to imagine that she'd leave Oracle to work in this administration.
It's also notable that she herself was an immigrant. She came over as an Israeli immigrant and someone who clearly could have been very passionate about particularly the travel ban uproar, but it was notably silent from Oracle in some ways.
Well, maybe silent publicly, but she's not a very public persona. But she's
that's a very good point. Yeah.
She's sharp, and she gets her way and makes her opinions known in very strong ways. She also was very good when she was on Wall Street. She was very effective on Wall Street too. So she's got a lot of good perspective there.
So maybe some bridges being built by certain companies in Silicon Valley with the White House. I want to shift gears a little bit to Ian, your particular area of expertise, and we have had so much news in terms of the chip makers this week, whether it's Qualcomm fighting back at Apple, whether it's just TSMC, the Asian company that's today coming out with its own earnings reports. Can you tell us also a little bit about Qualcomm and BlackBerry? So much, I don't know where to start.
Yeah, I mean, Qualcomm obviously started off on the offensive legally, fighting back against Apple, accusing them of lying, saying you've created this global conspiracy to try and get us because you don't want to pay us as much as we want you to pay. And then as the week moves on, all of a sudden they're on the wrong end of a legal dispute where BlackBerry, it's kind of a tragic story in a way because BlackBerry had prepaid them for these licensing, believing they were going to sell all of these phones, and then they didn't sell them. And then it's like, well, can we have our money back, please?
And equally, the chips have been a particular area of growth on the stock market. I mean, they've been a real outperformer when you're looking at some of the stocks. And today, not so much with TSMC.
The Philadelphia Semiconductor Index up about 47% over the course of the last year. And a lot of that's driven by some M&A, too, with the belief that some companies will be acquired. There's not a lot left on the table. But as far as Qualcomm goes, I mean, aside from Rambus, there's probably been no other chip company to whom the legal department is maybe as important as any other part of the company, even to the R&D level.
It's the majority of their profit by a wide margin.
And it's worth remembering that this story will run and run. The battle between Apple and Qualcomm, and how much will the fact that BlackBerry won didn't really take it to the public courts, this was more an arbitration, but still it's a coup for Apple potentially?
Well, I mean, the way to look at it is Qualcomm immediately said, look, this has no bearing on anything else we're doing. This was purely a binding arbitration that we agreed to be part of, nothing to do with anything else. But the optics, based upon the situation that Qualcomm is in, based upon what it's trying to say this week and trying to get its message out, don't look great.
That was Bloomberg editor-at-large Corey Johnson, of course, and Bloomberg technology reporter Ian King. And an update on another chip maker for you, Toshiba. The company has temporarily cancelled meetings and a decision on its sale of its memory chip business. That's according to people familiar with the matter, who say that the delay is to address concerns raised by industry partner Western Digital. The California-based firm says a purchase may violate their contract and wants to be negotiated with exclusively before any sale. Now, a predominant theme in Silicon Valley over the past year involves powerful founders behaving badly. Uber, Zenefits are two companies whose public reputations have been partly undone by such. Now, the same destructive dynamic appears to be playing out at the world's most valuable cybersecurity startup, Tanium. Joining us with a Bloomberg scoop, Bloomberg Technology's Lizette Chapman, and still with us, our guest host of the hour, Techonomy CEO David Kirkpatrick. This is a fascinating read. I urge all our viewers to go onto Bloomberg.com and have a read of it, because this is a company that provides their technology to government agencies, to every bank in the US, and big valuation, bad behavior. People are leaving because of it.
That is partially true. People may be leaving. Some were fired, some left voluntarily. But, you know, 9 executives, senior executives, leaving within 8 months definitely means something was going on, and that's why my colleague Sarah McBride and I began investigating.
And the something that's going on, give us a flavour of some of the behaviour, because you reveal something called Orion's List in particular.
Right. Well, based on interviews we did, well, with more than 24 current and former employees, investors, business partners, and the like, it seems that there is a pattern of firing employees right before they vest some of their shares. These are people who reach a certain point, who've been there long enough, that are entitled to purchase some of their options. And these people wound up on what was referred to internally as Orion's List. Some of Orion Hindawi's deputies even called it tastelessly and somewhat improbably Schindler's List.
Orion Hindawi himself being the CEO of the company, you write in the story of some of the behaviour he has made, perhaps laughing at slightly overweight colleagues, the like. So some of his behaviour come to the attention of notably a key investor in this company, but perhaps we're not pushing quite hard enough. Andreessen Horowitz holds a big stake.
That's correct. This is one of Andreessen Horowitz's largest investments of their entire portfolio, one that they've invested well over $140 million into. And again, this company was last valued privately over a year ago at $3.5 billion. So this is not a small company. These are not small stakes on the table. And some of the behaviors that he engaged in, according to our interviews and our reporting, included publicly belittling employees for being overweight, for being stupid, and spreading rumors and saying awful things in front of other employees about sexual promiscuity and drug use.
Doesn't strike you as a CEO of a business that could potentially be going public, or indeed had talked about wanting to? So we'll see how that particular story progresses. Lizette, it's amazing reporting on your behalf and Sarah McBride, and I'm sure the story has some legs to run still. Thank you very much indeed. Bloomberg Technology's Lizette Chapman with a fantastically readable scoop. I urge you to read it. And while we're on the topic of big tech startups having internal meltdowns, as mentioned earlier, Uber, there is a new report in the Information that talks about a so-called HELL program designed to subvert Lyft. David Kirkpatrick in New York, give us your reaction, because I know you've been taking to the internet already to voice it in some part.
Well, I have to say I have been shocked by the repeated revelations about Uber, and the Information in particular has done spectacularly good reporting in recent weeks. And unfortunately, every time they pull out the magnifying glass, they find something else unpleasant under the lens. And this time, it really looks like Uber has engaged in what seems by the reporting to be illegal industrial espionage against Lyft, where they were trying to basically manipulate drivers by pretending to be Lyft customers and getting more information than they really should have had, and then correlating it in a sort of impressive database fashion, but really in a way that is, I think, scary if you look at what it means for companies that are all algorithmic, which is how Uber and Lyft operate, but also really just unethical. And it's one more unethical thing about Uber that I think, and probably illegal thing, and it just, this stuff has got to stop. And it, you know, in relation to your previous story, you know, it's a transparent age. People are going to get found out. You can't act badly.
We'll see how Lyft responds. David Kirkpatrick has indeed responded already. Techonomy CEO and guest host of the hour. Fantastic as ever having you join us. Thank you so much. Now, coming up, more from our exclusive and wide-ranging interview with Lisa Jackson. She's Apple's Vice President of Apple's Environmental Policy and Social Initiatives. This is Bloomberg. More now on our top story. Apple announcing 3 of its suppliers have committed to use only solar energy to make components for the company. But the company's actions for sustainability don't stop there. Apple is pushing towards its goal for all facilities to be 100% renewable. In an exclusive interview, Bloomberg's David Gura spoke to Lisa Jackson, Apple VP of Environment Policy and Social Initiatives, and asked her, well, where Apple stands now with their goal.
We're announcing very soon that we're at 96% renewable worldwide, and we're 100% renewable in the United States and 23 other countries. So we're feeling pretty good. I mean, 96, a lot of people would say, let's stop. But, you know, Tim Cook's made it really clear we're not going to stop until we're 100% renewable everywhere. And I think the really cool part of that is we look at our carbon footprint as so much more than just our offices, our data centers, our stores, even our distribution centers. All that's included in the 96%, but now we're moving on to our supply chain. And these are companies we don't own. You know, they are partners of ours. We certainly work really closely with them. And we're now at 7 members of our supply chain who've committed to make their Apple operations 100% renewable too.
How do you quantify how much energy, how much electricity a company like Apple uses? How do you explain the quantity of power that this company needs? You know, we looked at it. For Apple itself, I think we looked at it and said our carbon footprint is 38, million metric tons a year. That's more than some small countries. It's, if you look at it in the world's average, it's less than 0.1% a day of what the world does. And so one of the things we also say is you can't change the world and deal with climate change if all you do is make yourself green. And so we have to, Apple's about innovation. Apple's about being the first to something. So when we find something, now the idea is, how can we help our suppliers get green? How can we help our customers feel good about the clean energy that they may be able to access and that we're accessing on their behalf for stuff like FaceTime or when you, send an iMessage, knowing that that's running through a data center that's running on clean energy. You're part of it. How do we make that connection for people? So, it doesn't sound like we're huge, except 38 million metric tons is nothing to sneeze at. I remember touring a data center in western North Carolina. It used to be a furniture-making town. Hickory used to be a furniture-making town, put data centers there because of the infrastructure. They needed the access to water that those furniture factories had, to electricity. And it struck me just how much energy a data center consumes. You can talk about using renewable energy to supply those data centers. When it comes to efficiency, are we getting more efficient data centers, or is that still something just a really high hurdle to get over? No, I actually think that a lot of companies, including Apple, have been saying for a while, if we're going to do this, these just thousands of basically computer servers is what makes up a data center. And when you go in, there's sort of this futuristic hive, right? Did you get to go inside one? And so we need to make sure that as we move society to this very, a virtual world or a data-driven world or big data, all these terms that we all hear and that everyone's investing in, let's do it in a way that means that we're moving towards cleaner energy, not, traditional brown power. And so, yeah, it is a lot of energy. And yes, it's 24/7. You can't have it go down. Reliability, consistency of the power supply is incredibly important. So it makes it a complex challenge, but one which a lot of companies are starting to follow Apple's lead and say, hey, we want to get to 100% renewable too.
How much of your job is evangelizing for renewable energy or for more efficient machines? I think about the MacBook that I have from 2012. I'm sure it's less efficient than one that you're making today. How do you make that case to customers that it's in their interest, broadly speaking, to adopt machines that are more efficient?
You know, it's interesting. Customers care about how long their battery lasts. So think about efficiency in that terms. I mean, part of what we do at Apple is it should just work. It should just be this wonderful experience that sort of delights you and makes you happy. Part of that for us is if the battery lasts longer, if the machine is more efficient, it goes longer on a single charge, it costs you less money to charge it. Those are all points that we make. You know, every one of our products, if there's an Energy Star rating for that product, we want to be the highest level of efficiency. We want to be Energy Star, right? And so I think same with EPEAT, which measures how, you know, recyclable. We want to be EPEAT Gold. So we make the argument to the customer, but we make it on the things that the customer cares about, including the environment. Customers care about the environment, but what they want to know is that the really smart people at Apple are thinking about how to do it for them, make it better, make it more accessible to them. And I think next week we're going to be telling some of our stories for Earth Week to hopefully make that connection to the customer and the hard work we do and innovation we do to make clean energy and environment sort of part of their everyday life.
You mentioned Tim Cook, your boss, has bought into this. It's important to him, it's important to the company. What do you say to the skeptical investor who wonders why Apple is putting so much energy into these issues?
You know, Apple's doing it because it's the right thing to do. First and foremost, if Tim was here, I know he'd say, we do what's right. It's one of our values to leave the world better than we found it. He said that many times. But it's also, we challenge ourselves to make it something that is sustainable also economically. We're not trying to cost the investor money. We're trying to show a return as much as possible on these investments. In fact, last year, you know, I think it was last February, we put out a green bond to allow people who wanted to invest in the bonds, in corporate bonds, to invest in us. And they loved it. It was subscribed to really quickly. We just put out our first annual report on the green bond, $1.5 billion, the largest corporate green bond in the US. And people liked it because they trust Apple to spend the money like we say we will. And we believe that it yields a return. So that's, I mean, that's good business, right? That's what this is all about. You don't have to choose between good business and a good environment.
That was Apple VP of Environment Policy and Social Initiatives, Lisa Jackson. Sticking with Apple, RBC Capital Markets told investors that a mega merger of Apple and Disney, while unlikely, would make sense strategically for the iPhone maker. The analyst behind the call joined Bloomberg Daybreak Americas to back up his reasoning.
Apple has been extremely focused on growing their services business. Apple has talked extensively about increasing their content portfolio. The second part is obviously they've talked about the ability to do deals, and size is not a big factor for them. With the potential of repatriation, I think you add those two things up, there's a potential, and this has been a big discussion with investors, I think, that could Apple make a big play in media, and we certainly think it's very large, but Disney would make a ton of sense for them.
Coming up, we go inside the facility where state-of-the-art bomb disposal robots are assembled and find out why these devices will always need human help. This is Bloomberg. Now, defusing a bomb is categorized as one of the most dangerous jobs to have. But now, well, US bomb squads have some help. The Andros robot is a machine capable of assessing and defusing suspicious packages. Bloomberg has the story.
So you want me to tell you what we do specifically? Just, okay. We blow up bombs. I guess if that's... After 9/11, there was a push from the federal government for bomb squads to obtain robots. We use it about 1 to 2 times a month. It gives us, as officers, the ability to not approach something that we think may contain explosives.
Yeah, so let's go to that video of authorities sending out that robot to investigate the suspicious item. It appeared to be some sort of jacket, a member of the bomb squad moving in, and obviously all ends well. I mean, everyone's safe.
There are 466 bomb squads in the United States that operate a robot like this.
Here in Sacramento, the California Highway Patrol is showing me how their robot can perform missions controlled remotely by fiber optic cable or by wireless. This particular model has 3 cameras and a 2-way radio, and an operator can remotely control it as it climbs stairs, opens doors, picks up and removes suspicious packages, and blows them up. The robots, which cost about $200,000 each, are only sold to the military and law enforcement. Most US bomb squads own an Andros, manufactured by one of the largest military contractors in the country, Northrop Grumman. I visited their headquarters in Clinton, Tennessee, where the Andros robots are built by hand, repaired, serviced, customized, and tested.
Fire in the hole! Fire in the hole! Fire in the hole!
The products that we make and sell, I'm very proud of them because they do a good thing. They save people's lives.
They've sold more than 2,000 of these robots, and with so many bomb squads in the United States owning one, they show up in the news almost every night.
Back now from Dallas, where police ended the deadly siege on the city last night by using a robot with a bomb.
Dallas police turned to overseas battlefield tactics to take out the gunman.
The Dallas incident is important because it was the first time that a robot was used to take the life of someone posing a danger to the public. Northrop Grumman doesn't comment on incidents involving its robots, but what they and those who operate them are very clear on is that this kind of robot is not getting the ability to think for itself anytime soon.
You need that human element to decide what's safe, what's not. How do we do this? What are the ramifications if we take this route of action? What's going to happen? Currently, with the current technologies in our robot, I just don't see it being automated to the point where you send it downrange, it handles your package, and comes back, and everybody's safe.
Now that does it for this edition of Bloomberg Technology. And of course, tomorrow is a public holiday with us. But coming up on Monday's program, Facebook's developer conference kicks off. And we'll be speaking with Ime Archibong, Facebook VP of Partnerships. This is Bloomberg.